Good morning everyone. Please come to question number 69 of advanced capital budgeting topic. I hope you have done the homework that was given to you. Question number 70. That was very easy question. Company X is forced to choose between two machines A and B. The two machines are designed differently but have identical capacity and do exactly the same job. Question is from study material. You have to make a choice between two machines A and B. Machine A will cost 1,50,000, last for 3 years, and it costs 40,000 per year to run. Machine B is an economy model. It costs 1 lakh rupees only, but will last only for 2 years. Cost to run 60,000 per annum. These are real cash flows. What is real cash flow? Cash flows excluding inflation. Cash flows excluding the effect of inflation. The costs are forecasted in rupees of constant purchasing power. So these are real cash flow excluding inflation. Opportunity cost of capital is 10%. Ignore taxation. We will assume that this is also real discount rate. We will assume that this is also real discount rate. Real cash flow discounted using real discount rate will give you NPV. Which machine company X should buy? Which machine company X should buy? The question is which machine company X should buy. Now in this problem, the life of machine A is 3 years, life of machine B is 2 years. So they are not easily comparable because their lives are different. Secondly, this is a cost minimization problem. There are only costs given in the problem. Cost of machine A, running cost of machine A, capital cost of machine B, running cost of machine B. So second thing is that our objective is cost minimization. Second issue is our objective is cost minimization. Is it right? So how do we compare the two machines? Which method you will apply? Can you apply NPV method? Can you apply NPV method when you are comparing two options with different life? Can you apply NPV method? The answer is no, because if you apply NPV method, the PV of cash outflow of machine B would be lower. It has only 2 years, and you will say machine B is better, but that is not a correct comparison. You will use machine A for 3 years and you will use machine B for only 2 years. So how can you compare them? By comparing present value, you are not doing justice. In that present value, machine A can be used only for 2 years and machine B can be used for, machine A can be used for 3 years, B can be used for 2 years. To make them comparable, we will calculate what is called equivalent annualized cost. Equivalent annualized cost. What is the annual cost per annum? What is annual cost per annum of using machine A, and what is annual cost per annum of using machine B? And wherever the annual cost per annum is lower, that option we will exercise. Okay, so we'll have to find out EAC. Please write down calculation of what is EAC, equivalent annualized cost. Calculation of equivalent annualized cost. Right hand side 2 columns, machine A, machine B. Machine A, and machine B. Okay, first point A, write down. First point A. What is purchase cost in year 0? Purchase cost in year 0 is 1,50,000 and 1 lakh. In this question, our objective is cost minimization. Our objective is cost minimization. Second, write down running cost. Running cost is 40,000, 60,000. Point C, write down life in years. This has 3 years life. This has 2 years life. Then point number D, present value annuity factor. Present value annuity factor at the rate 10%. So you will calculate annuity factor and answer 1 divided by 1.10 equal to memory plus equal to memory plus equal to memory plus memory recall function. So please check, you are getting 2.486, 2.486, and for 2 years 1 divided by 1.10 equal to memory plus equal to memory plus memory recall, you will get 1.735. Just confirm. So point number E will be present value of running cost. Running cost. Present value of running cost will be A multiplied by D. A multiplied by D. 40,000 into, sorry, B multiplied by D. B into D. B into D. 40,000 into 2.486. 99,440. And 60,000 into 1.735. 1,04,100. Point number F, write down. Total PV of cash outflows. A is purchase cost, E is present value of running cost. If I buy machine A, my present value would be 2,49,440. This is outflow. And if I buy machine B, 2,04,100. 2,04,100. If I buy machine B, 2,04,100. 2,04,100. Just wait a minute. There is some problem with the laptop. Okay, started again. Can these two numbers be compared? Please advise, can these two numbers be compared? And you can say machine B is better. Can I simply compare A and B and tell you that B is better because it has lower PV of outflow? The answer is no. With this amount, you get to use asset A for 3 years. With this amount, you will be able to use the asset B for 2 years. So in order to make them comparable, I will compute equivalent annualized cost. And how do I compute it? It will be PV of cash outflow divided by PV annuity factor. It is like calculating average, but instead of directly dividing by 3, we are going to divide by annuity factor of 3 year, because I have to give importance to time value of money also. So take on your calculator 2,49,440 divide by 2.486. Check the answer. 1,03,38 is right. 1,03,38, and second column 2,04,100 divide by 1.735, so you will get 1,17,637. This is called equivalent annualized cost. This is lower. So what is the decision you will write? Decision will be buy machine A because EAC is lower. Because EAC is lower. Okay? Because EAC is lower. It means per annum usage cost of machine A is 1,03,38, whereas per annum usage cost of machine B is 1,17,637. And what are the assumptions we are making here? Assumption is that the assets can be repeated with same cash flows. The asset can be repeated with same cash flows forever. That means if you want to purchase machine A again after 3 years, you will have to incur same cost 1,50,000 and same running cost 40,000. Second assumption, write down the discount rate is real discount rate. The discount rate is real discount rate. Cash flows are real, discount rate should also be real. Okay, so that is the answer of this question. Any query on this question now? Question 70 was homework. If you have not done it, do it today. Question 70 homework. Answer is given in the book. If you have doubt, you will ask me. Now the next important concept is optimum replacement moment. Optimum moment of replacement. When should old asset be replaced? When should old asset be replaced? Like for example, if you see there is one image on the right side, there is a delivery boy, and this company has got thousands of such delivery boys, and they are given a vehicle, a two-wheeler, to deliver your food ordered. Now really speaking, this vehicle can be used for 20 years also, 15 years also, 10 years also. But what happens if you use it for a longer period? The repair and maintenance will start increasing. Repair and maintenance cost will go up. For example, in year 1 repair maintenance will be only, let's say, 2,000, but in year 2 it will become 4,000, year 3 will become 6,000, year 4 may become 8,000, like this, year 5 may become 9,000. And the salvage value may fall. If you sell after 1 year, you may get probably, let's say, 25,000. But if you sell after 2 years, you will get only 20,000. If you sell after 3 years, you will get 15,000, 10,000, 8,000, like this. You have to keep on replacing this asset. You know that you have to replace the asset because you are into customer service business. You can't delay delivery. Okay, so find out optimum replacement timing. When should you replace? Should you replace every year, every 2 year, every 3 year, every 4 year, every 5 year? That is the question. So how to solve this question? The answer is, if I replace it after 1 year, it becomes an asset whose If I replace every 2 years, it becomes an asset with life 2 years. If I replace every 3 years, it is equivalent to an asset with life 3 years. If I replace every 4 years, it is an asset with life 4 years. So how do I compare them? Should I compare them only on the basis of present value? Should I compare them only on the basis of present value? Or should I compare them on the basis of EAC or EAB? Option 1, present value. Option 2, compare their EAC or EAB. What is per annum usage cost if I replace every year? What is per annum usage cost if I replace every 2 years? What is per annum usage cost if I replace every 3 years? Likewise. Okay. The answer is, in order to compare whether to replace at the end of year 1 or 2 or 3 or 4, you have to visualize as if we are comparing asset with different life, like the previous question we did in the classroom. Purposefully we did so that you will have a background ready. So compute their EAC or EAB, and if the objective is cost minimization, choose the lowest option. If the objective is benefit maximization, choose the highest option. One more example is, a cold drink bottling plant supplies the product to the shopkeepers through specially designed and fabricated delivery vehicle. The delivery vehicle must be periodically replaced, otherwise the cost of maintenance will be too high or the normal working will be hampered. So such companies cannot afford to delay, cannot afford to hamper the customer service because their reputation is at stake. One more example, a firm manufacturing consumer durable like fridge, okay, washing machine. Sometime the fridge will have a problem, washing machine will have a problem, microwave oven will have a problem. The customer will call the customer care center. They will say, we are sending one engineer immediately. So they are going to send one engineer. They have got several service engineers on their payroll, and they have to be given a bike so that he can reach the customer place as early as possible. But scooter life may be 10 years, but if you wait till 10 years to replace, by the time it goes into 8th, 9th, 10th year, continuous repair maintenance will be required, breakdown will be more, customer service will be affected, salvage value will go down, so they will need to replace it. It is better to find out what is the optimum replacement cycle, and you keep on replacing the asset in that optimum cycle. So how to take a decision, I have told you. Compare EAC or EAB. Mostly in most of the question you have to compare EAC because revenue model is not given. It's a cost model. Cost of the machine will be there, running cost will be there, repair cost will be there, maintenance cost will be there. So most of the time, most but not all, we have to compare EAC, and wherever the EAC is lower, you will choose that option. Yes, if it is an EAB problem, benefit maximization problem, revenue model is also given, then in that case we will choose the option which has higher EAB. Okay, treat it like you are comparing asset with different lives. If you can just visualize that point, my job is done. Okay, so one type of question will be, what should be optimum replacement cycle? What should be optimum replacement cycle of existing asset? This is one type of question. What is the optimum replacement cycle of existing asset? And second type of question will be, when should existing asset be replaced by a new one? When should an existing asset be replaced by a new one? This is another type of question. An asset can be used for, old asset is there. I have an old car. It can be used for 2 more years. So I can replace it today also. Now I can replace it after 1 year also, and I can replace it after 2 years also. I can replace it today also, after 1 year also, after 2 years. So the institute will ask you the question, when should an existing asset be replaced by a new asset? Suppose there is a new car in the market with better feature, better facility. So I will be tempted to buy that new car, but on the ground of only financial numbers, what is more profitable for me? Should we purchase the new car today, or after 1 year, or after 2 years? So that will be second type of question. In order to find out the replacement time of the existing machine by a new machine, the two questions are different. One is finding the optimum replacement cycle of a new machine, and the second question is when should an existing asset be replaced. EAC of the new machine with optimum replacement cycle should be compared with the present value of the cost of the existing machine under different option. So we will compute EAC of new machine. We will compute EAC of the new machine, and then we will compare with, if I replace here, what will be my present value? If I replace here, what will be my present value? If I replace here, what will be my present value? And then I can compare. So I will compare the present value of 2 years under different scenarios. I will show you when we solve the problem. So compute the EAC. Suppose you replace it in year 0, then you will incur EAC for year 1 and year 2. If you replace it after 1 year, use the cash flow of the old machine for 1 year and use the EAC of new machine for the second year. And if you replace after 2 years, you take the cash flow of the old machine for 2 years. Compute the present value. If it is a cost minimization problem, choose the lowest option. If it is a profit maximization problem, choose the highest option. Is it right? So once you compare them using same number of years, then we can take the decision. Okay? I will show you how to do this in one example. Actually, we have 2 or 3 examples on that. When you are using the concept of EAC or EAB, you are having 2 assumptions at the back of your mind. One assumption is the asset can be replaced indefinitely, which note I have given to you also, that you can repeat the asset infinite times with the same asset and with the same cash flow. That means you can purchase the same asset after 5 years with same cash flow, and you can do it infinite times. As many times as you want, you can repeat the asset. Second, revenues are not affected by the age of the asset. Second assumption is whether you replace after 1 year or 2 year or 3 year, revenues will not be affected. Therefore, this is not a necessary assumption. In some problems, they may also say as the asset becomes older, your revenue also starts falling because the output starts falling. If the output starts falling, revenue can also start falling. But the main assumption is this one: asset can be repeated indefinite time with same cost and same cash flows. So these are my discussion. You can understand better when we solve few examples. So today's lecture would be dedicated to optimum replacement timing. Come to question number 71. The cost of the new moped is rupees 10,000. Compute the optimum moment of replacement assuming the following cost information. So whenever you buy this moped, it will cost you 10,000 rupees, and you have to find out when should it be replaced. So it is the optimum replacement cycle of an asset. It is not second type, it is the first type of problem. You have an existing asset, and you want to know when should you replace it with the same asset, and you are given the following information. If you use it for 1 year, repair cost will be 5,000, salvage value will be 8,000. If you use it for 2 years, then repair cost will be first year 5,000, second year repair will be 8,000, but salvage value, if you sell it in the second year, salvage value will be 6,400. Then age of the moped is 3 years. Third year repair cost will increase and salvage value will decrease. So you can see in this example, as your age of the moped is going up, repair cost is increasing, but salvage value is decreasing. Now one very important assumption, assume that repairs are made at the end of each year. Repair cost will be incurred at the end of each year only if the moped is to be retained. What does that mean? It means that if I have to use the moped for second year, then I will incur repair cost of the first year. But if I don't have to use the asset for the second year, I will sell the asset as it is without incurring the repair cost. So if you want to replace after year 1, for example, you will only receive salvage value, you will not incur repair cost. But suppose you want to replace after 2 years, means you want to use the asset for second year, then incur the repair cost of the first year and get the salvage value of the second year. You will not incur repair cost of the second year. And one more time, suppose you want to replace it after 3 years. Then you will first incur repair cost of year 1. You will also incur repair cost of year 2 because I want to use the asset for third year, and you will get salvage value of the third year. Many students could not interpret this line, and they have taken repair cost in the first year also if the replacement cycle is 1 year. Follow the instruction given in the question. If this line was not there, then I will take repair in the first year 5,000 and salvage value also in the first year, both. But if this line is there that you are going to incur repair cost, only you have to retain it, then don't incur repair cost today. Okay, if you don't want to retain it. If you want to retain it for the next year, then incur the repair cost today. And to help you to compute present value, discount rate is 10%. So what should be the answer now? Now please visualize. Visualization is the most important thing in life. If you can visualize, you can do it. Assume that you are given a problem where the asset has 3 assets are there. Not one asset, 3 assets are there. Life is 1 year, life is 2 year, life is 3 year. And then you are given cost of the asset, repair of the asset, salvage value. So first you compute present value based on information given, but they are not comparable. To make them comparable, compute EAC. Because it's a cost minimization problem, I will select the option which has lower EAC. Okay, either you can prepare 3 different tables like in some books they do, or you can prepare a table with different columns. Total 8 columns we will draw. Okay, total 8 columns we will draw, that will serve the purpose. So please write down calculation of optimum moment of replacement. Calculation of optimum moment of replacement. Calculation of optimum moment of replacement. Presentation can be different, final conclusion must be the same. You have to get same EAC for all the 3 options. So we have actually 3 options, whether I should replace after year 1 or after year 2 or after year 3. And my objective is minimization of my usage cost. So I will choose the option with lowest cost per annum. Right, year, present value factor at 10%. Then write year 1, 2 columns, cash flow, present value, year 2, 2 columns, cash flow, present value, year 3, 2 columns, cash flow, present value. In year 0, year 1, 2 lines blank, keep a gap of 2 lines, then write down year 3, because I need to write some working also in the next line. So keep 2 lines blank between 2 years, year 0, 1, 2, 3. PV factor write down at 10% PV factor. PV factor you are going to multiply with the cash flow. PV factor is written. Now understand. Understanding is required in this question. Suppose you purchase a moped, it will cost you 10,000 and you are going to use it only for 1 year. You are going to use it only for 1 year and then you are going to sell it. So quickly reply, if you are going to use it only for 1 year and then sell it and you are not likely to retain it for the next year, would you incur repair cost? Would you incur repair cost? Would you incur repair cost? Just say yes or no. The answer is no, because in the problem it is given, not because I am saying. Problem says you will not incur repair cost if you don't want to retain it for the next year. Will you get salvage value? Yes, 8,000. You will get salvage value 8,000. 5,000 will not come. If that last paragraph is not there, then 5,000 will also come, 8,000 will also come. 8,000 is salvage value inflow. Calculate present value, 10,000. 7273. Take the total. This is 2727. Right? Present value is 2727 if you use the asset for 1 year. Okay, come to year 2. Now suppose you want to purchase a moped and replace after 2 years. So first you will buy the moped, 10,000. In year 1, you will incur repair cost because you want to retain it. You want to use it for the next year. So you will retain it, 5,000. And then in year 2, since I don't want to retain it, I will not incur repair cost. 8,000 I will not incur because I will sell it. If I have to sell it, why to pay repair cost? And I will get the salvage value. In year 2, I will get the salvage value. This is salvage value. And this is repair cost. Compute the present value. Please little fast. 10,000, 5,000 into 0.9091, 4546 negative. Salvage is positive, 5289. Please take the total. Take the total, 9257. Please check 9257. Now we'll go to year 3. Year 3, again same exercise. We'll buy a moped. We'll incur repair cost of first year. Will you incur repair cost of year 2? Just say yes or no. Yes, incur, because I am going to use it for third year. Will you incur repair cost of the third year? No. You are going to sell it. If you are going to sell it, then don't incur repair cost as per the instruction in the problem. So these are my cash flow. Present value 10,000, 4546, 0.8264 into 8,000, 6611, 0.7513 into 5120, 3847. Please take the total. Anybody for the total? Total of the last column 17310 negative. If you compare these numbers, you will say year 1 is better, but if you compare these numbers, they are not comparable. Here you are getting the benefit of moped only for 1 year. Here you are getting the benefit of the moped for 2 years. Here you are getting the benefit of that moped for 3 years. So how can you compare them? So to make them comparable, I will compute equivalent annualized cost. I'll compute equivalent annualized cost because it's a cost minimization problem. It's a cost minimization problem. So formula for equivalent annualized cost is NPV upon PV annuity factor. NPV upon PV annuity factor. Under that write down year 1. 2727 divided by 0.9091. 2727 divided by 0.9091. First year annuity factor will be same 0.9091. First year will be same 0.9091, 3000 rupees. Check the answer. Year 2 will be this is your NPV, and factor will be, you add these two number, that will be annuity factor. First and second year factor you will add, that is 1.7355. so the answer is 5334. The answer is 5334. The answer is 5334. Then we go to year 3. 17,310 divide by annuity factor. Add this three number or take on your calculator. 2.4868. 2.4868 annuity factor for 3 year. You are getting 6961. 6961. Now understand, these are like average cost per annum. These are like average cost per annum. If you keep on replacing every year, buy the asset, sell it after year 1, again buy the asset, sell it after year 1, it is equivalent to spending 3000 rupees per annum. If you buy an asset and keep on replacing after 2 years, buy it today, use it for 2 years, then sell it, the per annum cost of using the asset or equivalent cost per annum is 5334. It is like spending this amount per annum. If you buy an asset today and keep on replacing after 3 years, it is equivalent to incurring rupees 6961 per annum. So which is cheaper to run per annum? 3000 is the lowest. So my optimum replacement timing will be year 1. Write down decision. Write down decision. The optimum replacement cycle is 1 year. The optimum replacement cycle is 1 year. That means the company should keep on changing the moped every year on the pure numbers basis, pure numerical calculation basis, pure financial basis. as the EAC is lowest. As the EAC is lowest. Do you agree? This is how we will compute optimum replacement cycle of an asset. You can apply it in your own life also. Apply it for your mobile phone, apply it for your two-wheeler, apply it for your car. Is it right? Question number 72. A firm is having an asset with a remaining life of 2 years, after which it must be replaced. Now this is the replacement of an existing asset. This is second type problem, type 2 problem. The previous one was type 1 problem. Type 2 problem is when should existing asset be replaced by a new one. Type 1 problem is what is the optimum replacement timing of a machine which your company requires for a very long time. A newer and more efficient model of the same machine having a life of 4 years have just been introduced in the market. So you have an existing machine which you can use for 2 more years. If you want, you can use it for 1 year, you can use it for 2 years, you can replace it now also by a new and better machine. But just new and more efficient model does not mean you are going to replace it now only. On pure financial ground, you have to take the decision. The present value of the total cost of the new machine is expected to be 45680. Present value of the total cost of new machine is 45680. So if you purchase the new asset, the present value of all the future cost, purchase cost, repair cost, maintenance cost, running costs, everything put together has a present value of 45680. However, if the firm continues with the existing machine, suppose you want to use for 2 more years, its cost structure and cash outflow would be as follows. In year 0, if suppose you replace it today, you can sell it for 18,000. If you replace it today only, then 18,000. But suppose you want to use it for 1 year and then purchase the new asset, then you will incur 6,000 rupees maintenance, 1,000 rupees repair in year 1, and then you can scrap it for 12,000 at year 1. If you replace it in year 2, then you will incur repairs and maintenance for year 1 and 2, and you will get the scrap value in year 2, The firm's discount rate is 15%. When the existing asset be replaced by the new one? Option 1 now, option 2 after 1 year, option 2 after 2 years. So this is a different problem. Here we have an existing asset. And we want to know when should it be replaced. So tell me, how do I solve it? I will solve this question by 2 methods. Method 1, method 2. Understand method 1 first. I am going to explain, then I am going to dictate also. Method 1 is we have to replace the old asset by the new asset at the end of 2 years. Do you agree? Just keep saying yes or no. After 2 years, I have to replace, in any case, the old asset by the new one. Do you agree? Maximum how much I can use the old asset? I can use the old asset maximum for a 2-year period. In any case, I have to replace it after 2 years. Yes or no? Yes or no? Yes, because after 2 years the old asset life will be over, and then maximum I can use it for 2 years, and from third year onward you have to use the new asset. Is it right? So cash flow from year 3 to infinity will be same. Cash flow from year 3 to infinity will be same whether you replace today or after 1 year or after 2 years, because third year onwards you are going to use the new asset only forever. So where is the difference in cash flow? The difference in cash flow will arise. If you replace after year 1 or year 0, year 1 or year 2. Cash flows can be different only in this period. If you take a replacement decision in this period, cash flow of year 0, 1, 2, 3, 0, 1, 2 will be different. From third year onwards, the cash flows are going to be the same. Forever. So what I'll do, I will choose option 1, replace now, compute the cash flow of first 2 years. Or suppose I decide to replace old asset after year 1, again compute the cash flow of year 1 and 2 only up to 2 years. Or if I decide to replace after year 2, I will compute the cash flows of year 1 and 2 only, compute their present value, and because it's a cost minimization problem, wherever my PV of cash outflow in the first 2 years will be lowest, that option we will take. Do you agree? If I just compare the cash flow of the first 2 years only under the 3 alternative, my answer is going to be the same. My answer is would be the lowest answer, because after 3 years the cash flow under all the 3 alternatives are going to be the same. So write down, first write down method 1. Write step 1. You have to concentrate. In the exam, this type of questions are asked and very few students are able to get it right unless you have practiced it in advance. So first we will compute equivalent annualized cost of using new machine. If I purchase a new machine, what is my annual usage cost? How much does it cost per annum if I purchase a new machine? Write down equivalent annualized cost of using new machine. Just add the word new there. Equivalent annualized cost of using new machine equal to PV of total cash flow of new machine, divide by PV annuity factor, in bracket 15%, 4 years. 15%, 4 years. 15%, 4 years. Question has already given you PV of cash flow in the third line 45680, and on your calculator you please take annuity factor, check does it come to 2.8549. Please check and then write. So the answer comes to 16,000. 16,000 means if you purchase the new asset, it is equivalent to spending or incurring 16,000 rupees per annum. It is equivalent to incurring 16,000 rupees per annum. Okay, now I will dictate a note. You will listen to me and write a note. Just listen to me and write. Okay, note, write down. Note, are you ready? The old machine in any case, will be replaced. The old machine in any case will be replaced after 2 years. The old machine in any case will be replaced after 2 years. Next line. The difference in cash flows will arise only in the first 2 years. The difference in cash flows will arise only in the first 2 years. The difference in cash flows will arise only in the first 2 years. From third year onwards, we are going to use new machine. From third year onwards, we are going to use new machine, and the cash flow from third year onwards will remain the same, and cash flow from third year onwards will remain the same under all the alternatives. Cash flow from third year onwards will remain the same under all the alternatives. Next line. We will compare present value of cash flows. We will compare present value of cash flows for first 2 years. Under all the alternatives, and select the option where the PV of cash outflow is lowest, and select the option where PV of cash outflow is lowest. Okay, I hope you have written the note. Don't ask me to repeat. I don't remember what I said. I just dictated. So this was the note. Write down. Heading, write down step 2. Calculation of optimum replacement timing of old machine. Calculation of optimum replacement timing of old machine. Calculation of optimum replacement timing of old machine. Under that, write down option 1. Option 1 is replace now. Option 1 is replace now, or you can say alternative 1, replace now. Then draw this table. Year particulars, cash flow, discounting factor at 15%, discounted cash flow. Now we have to only write those cash flows which we are going to receive or pay in the first 2 years. Is it right? So visualize, you have an old machine which you are going to sell it today and purchase a new machine, and on new machine the annual cost per annum is 16,000. So what are the cash flows that are going to take place? You are going to sell the old machine in year 0. So that cash flow will take place. Year 0, scrap value of old asset, which is given 18,000. It is positive cash flow, positive number. In 1-2, equivalent cost of new machine per annum. We have already computed this. If I buy the new asset, I will incur 16,000 rupees per annum. So 16,000 rupees outflow per annum will take place. Find the factor yourself and compute present value. Find the factor yourself and compute the present value. Anybody? Present value? Please reply. If you don't reply, how will I understand? So factor is 1.6257, present value 26011. So my PV of cash outflow of first 2 years would be 8011, because from third year onward, from third year till infinite period, you are going to incur 16,000 rupees per annum. Is it right? Now write down option 2, replace at the end of year 1. Option 2, replace at the end of year 1. Draw this table please. Year, particulars, cash flow, discounting factor at 15%, discounted cash flow. DCF means discounted cash flow, or you can write present value, or you can just write present value. Year 1. Now you are not going to sell the asset in year 0, so that cash flow will not take place. There is no need to write opportunity cost also, because when you are comparing one option with another option, in previous option we have already considered it. If you consider it in this option, it will be double counting. The difference between two answers will be doubled because of using same information twice in decision making. So only write here whatever cash flow that will actually take place. So in year 1 you are going to use the old asset. You have decided to use the old asset for year 1 and then replace it. So what is my year 1 maintenance cost? First line table 6,000. Then year 1 repair cost, first line table, second line of the table 1,000, and you will get scrap value 12,000. So for first year you are going to use old asset, and these are the cash flows with respect to old asset. Then second year I will incur equivalent annualized cost of new machine, because in second year new machine will be used, first year old machine will be used. So up to year 1 old machine cash flow, from 2 onwards new machine cash flow. The cash flow of new machine per annum is 16,000 rupees, already calculated, right? First year all cash flow of old asset will be written, second year new. From third year onwards till infinity you are going to incur 16,000 every year. Now please write the factors. 0.8696 3 times 0.7561, multiply. Tell me the total. Anybody for the total who can give me the total? I want from you, so that I will understand that you are writing and not just copying. Yes, total please. Total of the last column. Check the answer. Negative 7750. Very good. Negative 7750. Okay, one more option we have. Replace at the end of year 2. Option 3 write down. Replace at the end of year 2. The previous answer was 7750 negative. Those who have not got it, just write the total, check it later. Now next is replace at the end of year 2. Replace the old asset at the end of year 2. Replace the old asset at the end of year 2. Format is same. Refer your question. Only write cash flow from the old asset. Only write cash flow from the old asset. Only write cash flow from the old asset. Okay. Only write cash flow from the old asset. Year 1 maintenance 6,000, year 1 repairs 1,000, year 2 maintenance 8,000, year 2 repairs 4,000. You will ask why we have not written scrap value in year 1, because we are not going to sell it. Simple common sense. If I am not going to sell it, how will I get the scrap value of year 1? And you will get scrap value in year 2. You will get scrap value in year 2, 3,000. Now your question would be, why we have not written 16,000? 16,000 will be incurred from third year onwards. First 2 year we are going to use the old asset. Okay. Now compute the present value. Compute the present value. Compute the present value. For year 1 factor is 0.8696. For year 2 the factor is 0.7561. Total of the last column. Be little proactive. Total of the last column. Total of the last column. Yes, please. Total of the last column. You are waiting for me and I am waiting for you. Very good. 12,892 is the right answer. Now we have got 3 answers. Year 0, year 1, year 2. So can you just compare and tell me which is the lowest outflow? Which is the lowest outflow? Which is the lowest? 0, 1 or 2? You have all the 3 numbers with you. You can compare. So the answer is 1. Very good. Write down conclusion. Write down the conclusion. The company should replace the old machine at the end of year 1. The company should replace the old machine at the end of year 1, as it will minimize the total cash outflow. 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 Is it right? So this is method 1. In method 1 we will compare by taking equal number of years. In method 1 we will compare by taking equal number of years. Now we will take method 2. Same problem I am going to solve by one more method, that is method 2. Is it right? In method 2 what we will do? We will compare EAC of new machine, which is 16,000, with EAC of old machine if replaced after 1 year and if replaced after 2 years, and if replaced after 2 years. If 16,000 is minimum, if 16,000 is lowest than these two answers, then replace now. If EAC of 1 year is lowest, then replace after 1 year. If EAC of 2 year is lowest, then replace after 2 year. So it is like again comparing three options. One is a new machine whose EAC is 16,000. Second, old machine, assuming it has one more year life. If you use it for 1 year, what will be EAC? What is annual usage cost? All numbers converted into a single figure EAC. And if you use the old asset for 2 years, what will be EAC? Comparison becomes easier. And then in the exam, whichever method you find easier for you to understand and whichever takes less time to solve, you can use that method. Both methods are allowed. So write down, before writing this option 1, first write down point number 1, EAC of new machine. EAC of new machine in bracket already calculated 16,000. In bracket already calculated is equal to 16,000. In the exam, don't write already calculated. You will have to calculate EAC of the new machine first. Okay, 16,000. 16,000. Then write down below option 1, replace at the end of year 1. Replace at the end of year 1. Replace at the end of year 1. And I am going to compute EAC if we replace at the end of year 1, which means I want to continue up to year 1. Okay, I want to continue up to year 1. So if I don't sell it now, I have an opportunity cost 18,000 rupees. Continuing with the old asset means not selling it now. Not selling it now means there is an opportunity value. There is a cost of that decision to use it for one more year. So 18,000 rupees will be treated as opportunity cost. Had you sold it today, you would have got 18,000. But you have decided to continue, so it is as good as investing in the old asset 18,000. It is as good as investing in the old asset 18,000 rupees. Okay, so 18,000 will be my opportunity value. Think as if you have bought this old asset from the market for 18,000. Present value 18,000. Year 1 you are going to use it. Maintenance you will incur. Already present value computed 5218. Repair cost you will incur. Already present value we have computed 870. And now you are going to scrap it. Now you are going to scrap it. Scrap value. Now you are going to scrap it. So scrap value. How much is the scrap value? 12,000. Same factor. Solve please. Solve please. 10,435. 10,435. 10,435. Take the total. Take the total. That is net present value. Take the total. Anybody? 13,653. 13,653. Take the total. 1 or 2 rupee difference is okay. PV annuity factor. PV annuity factor 0.8696 because it's 1 year only. Therefore EAC. Therefore EAC. Therefore EAC. Anybody? EAC. Net present value divided by annuity factor. Come on. Come on, please reply. You're a good student. You can do it. What is the answer? 15,700. If I use it for 1 year, then sell it, it amounts to spending 15,700 rupees per annum. Whereas the new machine will cost you 16,000 per annum. So this is lower. Let us try one more option. Option 2. Replace at the end of year 2. Replace at the end of year 2. Replace at the end of year 2. Draw the same format. Treat it like a 2-year problem. Treat it like a 2-year problem. Okay. Year 0 opportunity cost of salvage value 18,000. Year 0 opportunity cost of salvage value 18,000. Then year 1 maintenance 6,000. Year 1 maintenance 6,000 rupees. Present value 5218. Year 1 repair 1,000. Present value 870. Now wait, I am going to ask you a question. Will you write scrap value 12,000 rupees? Will you write scrap value 12,000 rupees? Will you write scrap value 12,000 rupees? No. One student is saying no. What about the other student? The answer is no, because you are not going to sell it. You are not going to sell it. You are going to use it for 2 years. So how can you sell it in the middle? Okay. Then one student will ask, can we take the opportunity cost 12,000 rupees in year 1? Again the answer is no. The answer is you have already taken opportunity cost here once. You can't take opportunity cost every year. Is it right? Suppose the life is 10 years. Will you take opportunity cost every year? So asking that question is also wrong. You can't take 12,000 scrap value. You can't take opportunity cost 12,000 also. We have taken it once. Just take it as 2-year life. The 12,000 was given for first answer, not for the second answer. For second answer, we are going to sell it directly after 2 years. So that we will take. Now write down maintenance. Write maintenance 8,000. Present value 6049. Repairs 4,000. Present value 3024. Present value 3024. Now you take scrap value. Now you take scrap value. Now you take scrap value 3,000. Now you take scrap value 3,000. 0.7561. 2268. Please take the total. Please take the total. Please take the total. 30893. 30893 negative. Can you please confirm 30893 negative is right? 30893. PV annuity factor. PV annuity factor for 2 years. PV annuity factor for 2 years. 15% 2 years. Check 1.625. कम करो. 1.6257. कम करो. 1.6257. 1.6257. Equivalent annualized cost. Equivalent annualized cost A upon B. Equivalent annualized cost A upon B. 19,002. 19,002. So I have 3 numbers to compare. 16,000, previous was 15,000 something and now it is 19,002. This is lowest. This is lowest. Can you see this is lowest? If this is lowest, you should reply old machine should be replaced at the end of year 1. Old machine should be replaced at the end of year 1. Write down the decision. Old machine should be replaced. Old machine should be replaced at the end of year 1. Old machine should be replaced at the end of year 1. Because EAC is lowest. Because EAC is lowest. Because EAC is lowest. Right? Now next is question number 73. Question number 73. Question number 73 is a May 4 exam question for 10 marks. And the same question is appearing in the study material also. Write down very important question. Very important. And this question can be asked in your exam also. Mind my words. AS Limited is contemplating whether to replace an existing machine or to spend money on overhauling it. So same question, that whether you should replace it or you can continue to use it for some more years. AS Limited pays no taxes. The replacement cost of the machine is 90,000 rupees. So what is 90,000 rupees here? Cost of the new machine. Cost of the new machine, and requires maintenance of rupees 10,000 at the end of every year for 8 years. And it has a maintenance cost of 10,000. At the end of 8 years, it will have salvage value 20,000. See the difference in the previous question and this question. In the previous question, they had given present value of all cash flow of new machine. In this question, we'll have to first compute PV of cash flow of new machine by discounting all these numbers. Is it right? And then this problem is equal to previous problem. Only one extra task you have to do. The existing machine requires increasing amount of maintenance each year and its salvage value falls each year as follows. Old asset can be sold today for 40,000. But if you want to use it, you can use it for 1 year, incur 10,000 maintenance, you'll get 25,000 salvage. If you use it for 2 years, you'll get 20,000, you have to pay 20,000 maintenance, 10 and 20 and 15,000 salvage likewise. So basically in this question we have 5 alternatives. Which 5 alternatives do we have? Now. You can replace now. You can replace after 1 year. You can replace after 2 years. You can replace after 3 years. And you can replace after 4 years. Oh my God. So 5 times you have to do the calculation. 5 times you have to do the calculation. There is no choice. There is no choice. You have to do it. The opportunity cost of capital is 15%. When should the company replace the old machine? Not whether to replace. Now the question is when should old asset, one existing asset be replaced? And you have to answer one of these 5 options. And then they have given you present value factor, annuity factor also, single year factor also. Right? So I am going to solve it by 2 methods. Write down method 1. write down method 1. Write down method 1. Under method 1, first what we'll do, first we'll compute the equivalent annualized cost of the new machine. First we'll compute equivalent annualized cost of the new machine. How much does it cost to use the new machine per annum? How much does it cost to use the new machine per annum? Format is same: year, particulars, cash flow, discounting factor at 15%, and present value. Year 0, cost of new machine, cost of new machine, cost of new machine 90,000, present value 90,000. It has a life of 8 years. Maintenance cost will be incurred every year equal to 10,000. Annuity factor is given in the problem. Don't try. Take it from the question. 4.4873. Good student will save time. Trust the institute. 44873. Year 8. Salvage value. Year 8 salvage value. Year 8 salvage value 20,000. Year 8 salvage value 20,000. 0.3269. 8th year factor given, take it. Multiply 6538. Can you please tell me the total? Can you please tell me the total? Yes, please, total. I will appreciate if you can give me the total. Anybody total? 128,335. Very good. Now write down below that table, write down equivalent annualized cost. Below the table write equivalent annualized cost. 128,335 divide by 4.4873 divide by 4.4873. 28,600. Please check. 28,600. What is 28,600? Per annum usage cost. It is, if you purchase new machine, it is equivalent to spending 28,600 per annum. It is equivalent to spending 28,600 per annum. Now write down step 2. Step 2, calculation of optimum replacement timing. Calculation of optimum replacement timing. Calculation of optimum replacement timing. Under that write option 1. Option 1, replace now. So method 1 means we are going to compare cash flow of 4 years. Note I have dictated. Note I have dictated. Okay. Note I have already dictated. First method is comparing cash flow for 4 years. First 4 year, whatever cash flow will take place, write that, compute present value. So if you replace now, what will be the cash flows? You are going to sell the old asset now. That will be my cash inflow, 40,000. That will be my cash inflow. And what about the next 4 year? The next 4 year, you will incur equivalent annualized cost of new machine. You will incur equivalent annualized cost of new machine, 28,600 per annum. 28,600 per annum. 28,600 per annum. factor we have to compute 2.8548. Just check, is it right? 2.8548 multiply 81647. Very good, 81647. Therefore your present value is 41647. Present value is 41647. Present value is 41647. Now write down option 2. Replace at the end of year 1. Replace at the end of year 1. Use it for 1 year. Then use new asset for next 3 years. Write year 1. Draw the format first. Now I am going to first use it for 1 year. Okay. Maintenance cost 10,000. Maintenance cost 10,000. Can you see maintenance 10,000? And you will get salvage value. Salvage value 25,000. Factor 0.8696. Factor is 0.8696. Factor is 0.8696. Two to 4, 2, 3 and 4, you are going to use new asset. From 5th year onwards till infinity, you have to use new asset in all the alternatives. From 5th year till infinity, your cash outflow will be 28,600 per annum. The difference in cash flow will arise only in the first 4 years. Anybody who can take the factor of 2 to 4, factor of year 2, 3, 4, you have to add. Yes, reply please. 2, 3, 4. Do you know how to do it? Those who don't know, I will tell you for the first and the last time. 1 divided by 1.5, press equal to. Don't transfer to memory plus. Now equal to memory plus, equal to memory plus, equal to memory plus and memory recall. And you will get an answer something like 1.9854. Last 3 number you have to add, not all 4. Multiply 56782. 56782. Add this last column. Add this last column. You will get 43738. 43738. Is this right? 43738. 43738. Then write down option 3. Replace at the end of year 2. 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 Year 1 we are going to use the old machine. Maintenance 10,000. Year 2 we are going to use the old machine. Maintenance 20,000. And in year 2 we are going to sell the old machine. I am going to receive in year 2 salvage value 15,000. Can you see that in the question? Year 2 will get 15,000. And then year 3 and 4. 3 and 4 we are going to use new machine whose annual cost per annum is 28,600. Take the factor of 3 and 4 together. How much is that? Anybody? 3 and 4 factor. Add factor of 3rd and 4th year. 1.2293. Multiply. Take the total of the last column. Please take the total of the last column. Give me the total of the last column. Total of the last column quickly. 47634. 47634 approximately. Now write down replacement at the end of year 3. Replacement at the end of year 3. First you are going to incur maintenance cost 10,000, same factor, same value. Second year you are going to incur maintenance cost 20,000, already calculated, PV 15122. Third year again maintenance cost. Factor of third year 0.6575, present value 19725. Now you are going to sell the old machine. So one more line I have to write. Salvage value. How much is that in third year? Salvage value in the third year. Is it 10,000? 0.6575, 6575 present value. Okay. And then in the fourth year equivalent annualized cost of new machine, EAC of new machine, right? EAC of new machine, that is 28,600. Factor of the fourth year 0.5718, 16353 present value. Take the total positive. There is one positive number also here. Yes, please reply. If you don't reply, how do I proceed further? I am only asking you the total, which must be ready by now. Just check the answer. Is it 53,321? Is it 53,321? Okay. Now finally option 5. Replace at the end of year 4. Replace at the end of year 4. Replace at the end of year 4. We have to draw the table. Year, particular, cash flow, discounting factor, DCF. Year 0 write down, year 1 write down, because we are going to use it for 4 years. So maintenance cost 10,000. Maintenance cost year 2 20,000. Maintenance cost year 3 30,000. Question in front of you. Present value we have already computed. Maybe you can copy from the previous answer. Year 4 maintenance is 40,000. Year 4 maintenance is 40,000. Present value factor we have computed. So please reply total. Keep the total with you and answer. You can answer even before I ask you. That shows you are an active student. And if you don't reply, I feel like sleeping. I go into yawning mode. We can't teach for 3.5 hours talking to ourselves only. Is it right? So the answer is 66415 negative. Now you have got all the answers with you. If you replace in year 0, 1, 2, 3, 4, search for the lowest answer. Search for the lowest answer. where you have lowest outflow. Can you answer where you have lowest outflow? Compare all the 5 answers. One student is saying year 0, one is saying year 2. Oh my god, year 0 I think is the lowest. See, the answer is printed in your book also. If you have the book, the second alternative answer they have given. Refer your book, second alternative answer, which is like what we have done, 41652, 43739. This is the answer, 47633 plus minus 1 or 2 rupees, 53321 and 66415. This is lowest, 41652. Okay. So write down the conclusion. Don't come home without writing the conclusion. What is the conclusion you will write? Conclusion: the company should replace the old machine now because PV of cash outflow is lowest. Because PV of cash outflow is lowest. PV of cash outflow is lowest. This is method 1, which is also printed in the book as alternative 2 answer. Can you see that? Alternative 2. Okay. Now I am going to solve the same question one more time by method 2. You will be convinced that method 1 and method 2, they generate same conclusion. Okay. Then in the exam you have a choice. You can solve by method 1 or method 2. So write down method 2. In method 2, what I'll do? First I will compute. Write down step 1. Compute EAC of new machine. Already calculated. Otherwise in the exam, first you will compute EAC of the new machine, which is equal to 28,600. Which is equal to 28,600. And if this is lowest, then we'll replace now. Understood? If this is lowest, then it is better to replace now only. And then what I am going to do? I am going to compare EAC of old machine if used for 1 year, if used for 2 year, if used for 3 year, and if used for 4 year, and then whichever is lowest, that we will take. Now write down below. First write down one heading. Write down one heading. Optimum replacement timing of old machine. Optimum replacement timing of old machine. Optimum replacement timing of old machine. Under that you write down option 1, replace at the end of year 1. Replace at the end of year 1. Write down the table first. Year, particular, cash flow, discounting factor at 15%, present value. So if you are going to compute EAC of the old machine, treat it as if you have to spend 40,000 rupees today, which is the opportunity cost of salvage value, and you are going to use it for 1 year. You will have to incur maintenance 10,000, but you will get scrap value. This is how you will compute the EAC of the old machine. treat it as if 40,000 is the cost of the old machine and you can use it for 1 year and then scrap. So if you use it for 1 year, maintenance will be incurred 10,000, present value 8700, and you are going to sell it. You are going to sell it after year 1 for 25,000. Check the present value. Check the present value 21,750 or approximately. Net present value, total of these three numbers 26,950, 26,950. PV annuity factor, if it is a 1 year problem, annuity factor and PV factor will be same, 0.870. Therefore, equivalent annualized cost, come on student, equivalent annualized cost 30977, 30977 in bracket write. So this is higher than 26,900, 28,600, sorry. This is higher than 28,600. Is it right? Now write down option 2, replace at the end of year 2. Replace at the end of year 2. Under that write down year, particulars, cash flows, discounting factor, present value. Again you treat it like this only. Suppose you are an intermediate student, you buy an asset for 40,000. In year 1 you incur 10,000. In year 2 you incur 20,000. But you also get a salvage value of 15,000. What will be equivalent annualized cost? That is the question. Do not consider scrap value every time. You have to only consider it at the end of that period. Year 0 opportunity cost 40,000, year 1 maintenance 10,000, year 2 again maintenance 20,000, present value 15,120, and now you are going to sell it, scrap value. Now you are going to sell it, scrap value 15,000, 11,340, 11,340. Take the total. Please take the total. 52,480. 52,480. Then you write down PV annuity factor. PV annuity factor 1.626. 1.626. Therefore EAC A upon B, EAC A upon B 32,276. 32,276. Check. Is right? 32,276. Okay. Now write down replace at the end of year 3. Replace at the end of year 3. Replace at the end of year 3 means today the opportunity cost is 40,000. You will incur maintenance cost for 3 years, and then in the last year you will get the scrap value also. Right? Right hand side, draw this table. Same process will follow. Opportunity cost of salvage value 40,000 Then write down maintenance 10,000, year 2 maintenance 20,000, year 3 maintenance 30,000. Compute present value also. Compute present value also. Then in year 3 there is a sale proceeds 10,000. Sale proceed 10,000. Now please take the total. So NPV is 79980. Please check. NPV is 79980. NPV is 79980. Write down PV annuity factor for 3 years. PV annuity factor for 3 years 2.283. 2.283. Equivalent annualized cost. Come on student, equivalent annualized cost. Check the answer. Is it 33710? Is it 33710? Okay. Now write down option 4. Replace at the end of year 4. Replace at the end of year 4. Replace at the end of year 4. Under that write down format first. Draw the format first. Year 0 opportunity cost of salvage value 40,000. Year 1 maintenance 10,000. Year 2 maintenance 20,000. Year 3 maintenance 30,000. Write present value also. And year 4 maintenance 40,000. Very easy. If you practice daily, you will find it very easy, this chapter. So today you will practice all questions done till now. We are almost on the 73 number question. 1,06,440 is the total. Check. Is the total right? And then we write down PV annuity factor for 4 years. PV annuity factor for 4 years 2.855. 2.855. Therefore equivalent annualized cost. Therefore equivalent annualized cost 37282. 37282. 37282. 37282. Okay. Which is the lowest EAC? New machine is the lowest EAC. If the new machine EAC is lowest, if the new machine's EAC is lowest, what will be your conclusion? The conclusion will be you will replace the old machine now. Write down the recommendation. Write down the recommendation and you will find your conclusion is same. Whether you go by method 1 or whether you go by method 2, your conclusion is same. Okay, so please write recommendation. The equivalent annual cost, the equivalent annualized cost under new option, the equivalent annualized cost under new option is rupees 28,600. Is rupees 28,600. Is lower than equivalent annualized cost of replacing the existing machine at different points in time, namely after 1 year, 2 years, 3 years and 4 years respectively. Full stop. Therefore, the company should replace the machine immediately. Company should replace the machine immediately. Okay, both methods will give you same conclusion. I have shown you in 2 problems. You can try in other problems also and you will get the same conclusion. Whichever method you find it useful, easier, you can follow that, right? Question number 74, please note down homework. Question number 74, please note down homework. Answer is printed in the book and you will be able to solve. Question number 75, I will solve in the class. I have a doubt in the institute answer. Okay, I have a doubt, so I am going to give my answer, then it is your choice. You want to take institute answer or my answer, that is your choice. Company Y is operating an elderly machine. Wow, elderly machine means old machine that is expected to produce a net cash inflow of rupees 40,000 in the coming year. I think this 40,000 is not printed. Please write in the book if not printed. If printed, then ignore. Net inflow of rupees 40,000 in the coming year and rupees 40,000 next year, which means year 1 cash inflow will be 40,000, year 2 cash inflow will be 40,000 if you continue with the old machine. The current salvage value is 80,000, but if you sell it in year 0, salvage value is 80,000, and if you scrap it next year, means end of year 1, the scrap value is 70,000. The question has not given what is scrap value if we scrap it after 2 years. So there is a either mistake in the question or I don't know. So if nothing is given, I can assume that scrap value after 2 years is 0. Today you can scrap it for 80,000. After 1 year you can scrap it for 70,000. But after 2 years, question is silent. If question is silent, then we can assume 0. Okay, because usually once the asset's life is over, we assume scrap value is 0 if nothing is given. And what is the option now? The machine can be replaced now with a new machine. Alternative 1, replace now, which will cost 50,000 but is more efficient and will provide a cash inflow of 80,000 a year for 3 years. So this machine has a life of 3 years. Annual cash inflow is given. So this question we have to maximize EAB. In this question we have to maximize EAB, not minimize. So that is a difference. So I will compute EAB of new machine. First thing, company Y wants to know whether it should replace the equipment now, alternative 1, replace now, or wait a year, means replace here, with the clear understanding that the new machine is the best of the available alternative and that it in turn be replaced at the optimal point. Ignore tax, very good. Opportunity cost of capital is 10%. Advice with reason. Advice with reason. What is the reason? Wherever the equivalent annualized benefit is more, I am going to select that. Is it right? So like the previous problem I am going to solve. Okay. This problem has revenue also. Other two or three questions we solved had only cost implication. This has revenue implication also. So you will write step 1, computation of EAB of the new machine. Computation of EAB of the new machine. Computation of EAB of the new machine. Then write down format same, year, particular, cash flow, PV factor at 10%, PV. Year 0, new machine will cost you 1,50,000. Cost of the new machine is 1,50,000. Then year 1, present value 1-3 write down, 1-3, cash inflow is constant. For new machine, what is the cash inflow? What is the cash inflow for the new machine? 80,000. PV factor 2.4869. Just check 2.4869 if it is right. 2.4869. Is it right? 2.4869. Multiply the two. You will get something around 1,98,952. 1,98,952. And then NPV 48952. Please check 48952 is right. Very good. 48952 is right. So now you come to step 2 below, or just write down below without changing the step number. EAB equal to NPV divided by PV annuity factor 10%, 3 year. NPV divided by PV annuity factor. Yes, please reply. What is the EAB of the new machine? 48952 divided by 2.4869. Yes, answer. The answer is 19,684. Please check. Approximately it is right. Approximately it is right. 19,683 is also okay. 19,683 is also okay. Now step 3, computation of optimum replacement timing of old machine. Make it step 2. Computation of optimum replacement timing of old machine. Computation of optimum replacement timing of old machine. Then I am going to dictate one note. Write down note and then we'll continue further. Note write down the old machine in any case would be replaced after 2 years. The old machine is in any case will be replaced after 2 years. Therefore, the difference in cash flows will arise. Only in the first 2 years. The difference in cash flows will arise only in the first 2 years. The difference in cash flows will arise only in the first 2 years. Next line, from third year onwards till infinity, the annual cash flows will be the same. The annual cash flow will be the same. Next line, we will compute present value of cash flows. We will compute present value of cash flows for the first 2 years. We'll compute the present value of cash flows for the first 2 years and select the option which has highest PV of cash inflow, and select the option which has highest PV of cash inflow, highest, because this is a benefit maximization problem, and select the option which has highest PV of cash inflow. Do you agree? If you agree, say yes. Now write down, we have 3 alternatives. First alternative 1, replace now. Alternative 1, replace now. Alternative 1, replace now. Draw this table again. Year particular cash flow PV factor at 10% PV. So if you replace now, today, for next 2 years, what would be the cash flow? Old asset will be sold now. Old asset will give you salvage value today. Salvage value of old asset today is 80,000. Just check. Salvage value of old asset is 80,000 and present value is 80,000. For next 2 year, you are going to use the new asset and you will get equivalent annualized benefit of the new machine. Equivalent annualized benefit of the new machine 19684, that is also positive. It is inflow, both are inflow. Present value factor 1.7355, last column present value, check 34162. Check 34162, is it right? Do you agree? So my NPV will be the total of the two, not the difference. NP will be 114162. 114162. Okay. If you replace now, the PV of cash inflow for first 2 year will be 114162. Beyond 2 year, in all the future year, you have to get 19684 every year. You will get 19684 every year. So difference will arise only in the first 2 year. Now write down option 2. Option 2, replace at the end of year 1. Option 2 is replace at the end of year 1, which means first up to year 1 use the old asset, and from year 2 onwards use the new asset. So if you use the old asset for 1 year, then cash flow will be 40,000. It is given in the question. Year 1 cash flow will be 40,000. If you use it for 1 year, first year, second year, cash flow will be 40,000, and you can scrap it also. Scrap value 70,000. Scrap value 70,000. Present value factor 0.9091. Total 63637. 63637. Okay. Now next is year 2. Year 2, now you start using the new asset, EAB of the new machine. EAB of the new machine. Come on student, 19684. 19684 factor 0.8264. 0.8264. Can you please multiply total of the last column. Total of the last column 116268. Please confirm 116268. 116268 is right. Okay, we'll go to the last option, option 3, replace at the end of year 2. replace at the end of year 2 means you will use it for 2 years, old machine. So whatever cash flow old machine will generate in 2 years, you will consider. Draw the table. Year particulars cash flow, PV factor at 10%, PV. So you will not sell the machine in year 0, you will not sell it in year 1 also, you will use it, you will get cash flow. Cash flow of the old machine 40,000, present value 36364. Again write down cash flow of the old machine only. You are going to use it for 2 years. 40,000, 33054. Now we don't know what is the salvage value after 2 years. From the reading of the question, it is not clear. So I have ignored it. So my NPV would be, or present value will be 69,420. 69,420. You will compare option 1, option 2, option 3 and select the highest one. Select the highest one. So would you please reply, where is my NPV of cash flow highest or PV of cash flow is highest? The student is saying year 1. Okay, you are right. Write down the decision. Replace the old asset at the end of year 1. Replace the old asset at the end of year 1. Replace the old asset at the end of year 1 because PV of cash inflows is highest. Because PV of cash inflows is highest. PV of cash inflows is highest. And write one assumption. Note, it is assumed that salvage value of old machine after year 2 is 0. It is assumed that salvage value of the old machine after year 2 is 0. Not given. So we have to assume something. Is it right? Is question number 75 over? Is question number 75 over? Yes. Any query now? Institute has presented the answer in a different way, which I believe is not appropriate. Then it is your choice what you want to do. This answer what I have written is foolproof. Okay. Now come to question number 76. This is from your study material. This is from your study material. Okay. So this we will take after the break. Okay. We'll have a small break first. It's a long question of 10 minutes. Please come back after 10 minutes. Right? See you after 10 minutes. Next very important question number 76. Welcome back to this amazing and wonderful topic. Question number 76. Question number 76, I am reading now. Please pay attention. A machine used on a production line will be replaced at least every 4 years. Must be replaced at least every 4 years. So the maximum life of this machine is 4 years. Cost incurred to run the machine according to its age are: purchase price 60,000, maintenance cost you will incur in year 1, 16, 18, 20, 24, 22, 2020. Then repairs will also start. First year no repair, but repair expenses are increasing significantly. Scrap value, if it is not printed in your book, then please write it. In some books it is not properly printed, so please write scrap value in rupees. First year if you sell it 32,000, second year if you sell it 24,000, third year if you sell it 16, fourth year 8,000 only. So scrap value is decreasing. Future replacement will be with identical machine with same cost. That means you can replace it with the same machine, same cost structure, same purchase cost, same maintenance, same repair, etc. Revenue is unaffected by the age of the machine. So this is a problem of cost minimization. Revenue is not affected by machine. Problem of cost minimization. Ignore inflation, very good. Ignore taxation, very good. Determine the optimum replacement cycle. PV factors at 15% given to you. This is type 1 problem. This I will call type 1 problem. What is type 1 problem? What is type 1 problem? Finding optimum replacement cycle. Finding optimum replacement cycle when it is beneficial to replace the asset. So in this question we have 4 alternatives. You can replace it in year 1 or 2 or 3 or 4. Is it right? So basically I need to solve it 4 times. I will compute EAC. If we replace in year 1, 2, 3 or 4, and the decision will be based on lowest EAC. The decision will be based on the lowest EAC. Is it right now? So when you have to find the optimum replacement cycle for a machine, it is better to compute EAC for all the options and select the one which has lowest EAC. So please write, already we have done one question. Now what is the difference between this question and the earlier problem? This problem does not tell you that repair will be incurred only if the machine is to be retained. So in this question we are going to incur repair cost irrespective of whether the machine has to be retained or not. Whether the machine has to be retained or not, we have to incur the repair cost in the respective year. Only if the problem says repair cost will be incurred if the machine is to be retained, then do not consider repair cost if you are going to sell it at the end of year 2. But this time we are not going to do that. We are going to consider repair cost. Questions are different. I know this query will come at a later stage. Why we have considered repair cost in this question and why we have not considered in the earlier problem, because the two questions are drafted differently, right? So let us write down 4 times I have to prepare this table, no choice. Calculation of EAC for 1 year replacement cycle. Calculation of EAC for 1 year replacement cycle. Table will be same every time. Year, particulars, cash flow, PV factor at 15%, PV. So if you use this machine just for 1 year and then replace it by a new asset, what are the various cash flows associated? So you have to only consider year 0 and year 1. Only year 0 and year 1. In year 0, cost of the machine. In year 0, you have to buy machine 60,000, and in year 1, you will incur repairs and maintenance. Repair is 0, maintenance is 16,000. So 16,000 you will incur. Present value factor is given in the problem. Please use the same factor, 0.8696. 0.8696. So you get 13914, and in year 1 you will scrap it. So residual value or scrap value, you will get equal to 32,000. Present value factor is given. Use the factor if given. Present value factor is given. So my NPV means PV of cash inflow minus PV of cash outflow. So net present value of all these 3 cash flows put together is an outflow of 46087. Then write down point number next, PV annuity factor. 15% comma 1 year, same factor, 0.8696. So now you please reply what will be EAC. You will reply, then only I'll move ahead. EAC, come on, fast. EAC 46,087 divided by 0.8696. Yes, come on, reply fast. 52,998. Very good answer. Sometime you people are amazing. Very good. 52,998. In bracket write down because it's an outflow. Now same format, please draw again. Same format again. Calculation of EAC for 2-year replacement cycle. Calculation of EAC for 2-year replacement cycle. Calculation of EAC for 2-year replacement cycle. Question is from study material. You can mark it, very important for upcoming exam. Trust me. Cost of machine, write down 60,000. Now suppose you are going to use it for 2 years. What are the cash flows from 0 up to year 2? 60,000. Then year 1 repair and maintenance, year 1 is 16,000. There is no, don't write scrap value of year 1 because you are going to sell it after 2 years. So you can't write scrap value every year. Scrap value will be written in that year in which you are going to sell. Year 2 also I am going to incur repair and maintenance cost. You can see in your question 18,000 plus 4,000. 18 is per maintenance, 4 is repair. 22,000. Factor is printed in the book. Factor is printed. Please make use of the factor. Present value 16634. Very good. Come on, next. Residual value year 2. I have asked you to write these numbers. It was not properly appearing in the booklet. There was some printing error. Present value 18146. The answer should flow smoothly without effort. It should be an effortless task. Take the total of these first 4 numbers. 72402. PV annuity factor for 2 years. Add these 2 factors. Year 1 factor plus year 2 factor. Please add 1.6257. Now again I will wait for your answer. EAC. Only then I will go ahead. This will tell me yes, you are also following the instruction. One student has replied 44536. Very good. Very good. 44536 is wonderful. Step 3. Now you can do fast because you have learned the trick now. Calculation of EAC for 3-year replacement cycle. Calculation of EAC for 3-year replacement cycle. Calculation of EAC for 3-year replacement cycle. Year particulars, cash flow, PV factor at 15% and PV. So now you imagine you have to use cash flows of only 3 years. If you buy an asset with 3-year life, what are the cash flows associated with that? So one is your purchase cost 60,000. Second, you will incur in year 1 repairs and maintenance 16,000. You can copy the present value from previous table. Don't waste time again. Repair and maintenance second year 22,000. Copy the factor, copy the present value. Then in year 2, year 3 will go repair and maintenance 20 plus 8. 28,000 repairs and maintenance. This is a question from the study material of the institute. Factor is given 0.6575. 0.6575. 18410. 18410. And you are going to sell it in the 3rd year. Residual value 14,000. Residual value 16,000. 16,000 inflow. 16,000 inflow, factor 0.6575. What is the answer? 10,520. 10,520. Please give me the total. What is the total now? What is the total of NPV? Very good. You got right. 98438. 98438. And now tell me annuity factor for 3 years. PV annuity factor 15% 3 year 2.2832. 2.2832. Add these 3 numbers and tell me EAC. Tell me EAC. If you tell me EAC, then only I will proceed further. Otherwise, I am not. EAC. EAC of 3rd solution. One student is replying 43,114. Very good. You are right. Amazing. 43114 is right. Okay, try the next one, last one. Calculation of EAC for 4-year replacement cycle. Calculation of EAC for 4-year replacement cycle. Calculation of EAC for 4-year replacement cycle. Year particulars, cash flow, PV factor and present value. Format is same. Come on student. Year 0. Year 0 cost of the machine 60,000. Year 0 cost of the machine 60,000. Year 1 repairs and maintenance 16,000. Copy from the previous table. Factor and present value. Save time. Year 2 repair and maintenance 22,000. Copy from previous table. Factor and value. Year 3 again repairs and maintenance. Very easy question. 28,000. Copy from previous table. Both factor and value. Year 4 you have to compute. Year 4 we have 20,000 plus 16,000 repairs and maintenance, that is 36,000. Fourth year factor is given 0.5718 multiply 20585. Everybody please one more. Year 4 scrap value is given. Year 4 scrap value 8,000 is given. 8,000 0.5718 positive number 4574 NPV. Only you will give me the answer, then I will go ahead. Those who want to copy will wait. Copycats will wait. Very good answer. In bracket write 124, 968 or 969, they are okay. 968, 969 are okay. 124, 968. Write down PV annuity factor for 4 year. Add these 4 factors and write here. Just check, is it 2.855? Is it 2.855? And tell me EAC. Anybody for EAC here? Anyone for EAC here? Yes, come on, reply. EAC. One student has replied 43772. Very good answer. Now only you will compare these 4 answers you have got and confirm which is the lowest one. The first was something around 52k plus something, then it was 44k plus something. This is 43114, this is 43772. This is lowest. Year 3 is lowest. Write the decision. Replacement cycle is year 3. Replacement cycle is 3 years because EAC is lowest. Because EAC is lowest. This question is from your current study material. Write down, very important for exam. Next question, number 77. Question number 77 from study material. This is also from your study material. Again, very easy question, similar question. Similar to the one we have solved just now, but we'll solve in the notebook again. We'll solve in the notebook today again. Question is Trouble-free solution, wow, is an authorized service center of a reputed domestic air conditioner manufacturing company. All complaint service related matter of air conditioners are attended by the service center. The service center employs a large number of mechanics, each of whom is provided with a motor bike to attend the complaints. Each mechanic travels approximately 40,000 kilometers per annum. TFS decides to continue its present policy of always buying a new bike for its mechanics, but wonders whether the present policy of replacing the bike every 3 years is optimal or not. It is of belief that as new models are entering into the market on yearly basis, it wishes to consider whether a replacement of either 1 year or 2 year would be a better option than the present 3-year period. The fleet of bike is due for replacement shortly in the near future. This whole big paragraph is useless for solving the problem. They could have simply written calculate optimum replacement cycle. Okay, but they have created a long story behind it. Now, the purchase price of the latest model of the bike is 55,000, year 0. Resale price of the used bike at current prices in the market is as follows. So, if you sell after 1 year, scrap value 35,000, 2 year 21,000, 3 year 9,000, and running and maintenance excluding depreciation means cash expense are as follows: road tax, insurance 3,000, petrol, repair, maintenance 30, which means you have to incur 33,000 in the first year, 38,000 in the second year, 46,000 in the third year. Okay, so this is if I am going to replace after 1 year, I will incur 33. If I replace after 2 years, I will incur 33 and 38. And if I replace after 3 years, I will incur all the 3. Salvage value you will get depending upon what is the date of sale. Opportunity cost of capital 10%. Determine optimum replacement cycle of the bike. This is type 1 problem. Type 1 problem means finding optimum replacement cycle. Finding optimum replacement cycle. And type 2 problem is finding the optimum replacement date of the existing machine. On that we have taken 3 problems today, and we have taken, this is third problem on optimum replacement cycle. So what do you want? Should I prepare 1 table only or 3 tables? 1 table or 3 tables? Tell me. So I am going to prepare in one single table all the 3 answers, and we can easily compare also. Or you can prepare 3 tables for each cycle, 1 table. Let us try this format. Up to 2 years, up to 3 years you can fit in 1 table, because if the number of years become 4 or 5, difficult to fit in 1 table in a small space. So write down in 1 table only, we'll get it. Calculation of optimum replacement timing. Calculation of optimum replacement timing. Year, and then you write down a big table, big column, replacement cycle. Under replacement cycle, 3 columns: 1 year, 2 years, 3 years. Under 1 year, 2 columns: cash flow, PV of cash flows at 10%. Under 2 years, 2 columns: cash flow, PV of cash flow at 10%. 3 years, 2 columns: cash flow PV at 10%. This is very similar to the previous question. Very similar. It has 3 years. The previous question had 4 years, and because it was 4 years, I have written separately because difficult to fit in one table in the notebook. Right, year 0 1 line blank, year 1 1 line blank, year 2 1 line blank, year 3 1 line blank, then write NPV, then write PV annuity factor, and then write EAC. So this will be my format. Okay, we have done this in the previous problem also, but by making separate tables. This time I am not preparing separate tables. Year 0, suppose I replace every year, my cash flow will be in year 0 55,000 cost of the machine, and in year 1 I will have to incur, see the calculation, I will incur 3,000 road tax, 30,000 is petrol repair, and I will get 35,000 rupees salvage value. I repeat, salvage value will be 35,000, road tax 3,000, petrol repair 30. So I will have a net cash inflow. Can you see net cash inflow? 2,000. Do you agree? Do you agree 2,000 rupees salvage value is more than expense? 2,000. Second year, third year, nothing. Compute present value. 55,000. 2,000 divided by 1.10. 1818. Please take the total and you will get NPV. That is how much? Negative 53182. Negative 53182. PV annuity factor will be same for year 1, 0.909. 0.909, and therefore EAC, if you replace every year, then it is 58506. Please confirm. Just confirm, is it right? 58506. Very good. Now we'll come to second year. Second year, suppose you want to replace after every 2 years. Cash flow will be 55,000. Cash flow will be 55,000 in the year 0. Year 1 cash flow will be road tax 3,000, repair maintenance petrol 30,000. Total will be 33,000. And in year 2 we are going to scrap it also. So we are going to receive 21,000 rupees scrap value minus 3,000 road tax minus 35,000 petrol repair. So what is my net cash flow of the second year? 17,000. 17,000 is right. Please check. 17,000 is right. Now just compute the present value. Just compute the present value. 55,000 is same. 33,000 divided by 1.10. 30,000. 17,000 divided by 1.10, 2 times equal to 14050. Total 99050. 99050. 99050. Annuity factor for 2 years. Annuity factor for 2 years 1.735. 1.735. EAC 99,050 divided by 1.735. How much is that? How much is that? 57089. Please confirm. Is it 57089 approximately? Everybody please check. 57089. Okay. Now we'll go to replacement cycle is suppose 3 year. Year 0 I am going to purchase the bike. Year 1 same cash flow 33,000. Year 2 only these two costs will be incurred 38,000, 3,000 and 35,000, 38,000. And year 3 salvage value minus road tax 3,000 minus petrol repair maintenance 43,000, net outflow 37,000, net outflow 37,000. So my learned student, please give me the answer of the last column. I am waiting for the answer in the last column. Unless you give the answer, I am not going to move forward. I will wait, but I will not go ahead. So I have received one reply from a student, 144,203, exactly same answer, very good. 144,203, and then you divide by annuity factor 2.486, divide by annuity factor 2.486, you will get 58006. Is it 58006? Please confirm. 58006. Very good. The answers are very close, but this is lowest. This is lowest. They are very close, but this is lowest. So you have to write a conclusion. Optimum replacement cycle is 2 years. Optimum replacement cycle is 2 years as EAC is lowest. As EAC is lowest. As EAC is lowest. This is also from your study material. You can prepare 3 different tables, or in one table you can write, but show all the calculations. Show all the calculations. Understood? So I have taken 3 questions of type 1, 3 questions of type 2, and 1 question I have given as homework. So this was about option to replace. So we have discussed option to abandon. Our topic is right now real options in capital budgeting. Option to expand. Option to replace. Under option to replace, we have covered 2 topics, whether to replace or not, whether to replace old asset, and now we have covered when to replace, optimum replacement cycle. Optimum replacement cycle. Under optimum replacement cycle also we have covered 2 types of problem, type 1, type 2. Type 1 we have to find optimum replacement cycle of any asset, and type 2 is when should the existing asset be replaced by the new one. So this is what we have done, and this area which we have covered is very important for exam. Now the next is option to postpone. Option to postpone means should we start a project now or after 1 year or after 2 years, whether this project has an option to delay. The nature of the project should be such that you should be able to delay it. If the option to postpone or option to delay is there, then we have to find out when should we start the project now, after 1 year or after 2 year, and like this. Normally in the exam this will be the options. The answer would be simple. I am going to compute NPV if we start now, NPV if we start after 1 year, NPV if we start after 2 year, all at present value in year 0. For comparison purpose, all the NPV should be in year 0, and if it is a benefit maximization question, select that option which has highest NPV. Why do we need to postpone? The reason is sometimes we need more information. If I get more information, I will have clarity. Like for example, election. Suppose election is going to take place next year, suppose, and then there are two possibilities. Party A can come in power, Party B can come in power. Is it right? If Party A comes to power, their policy will be favorable to me. If Party B comes to power, their policy may be unfavorable to me. So if I wait for 1 year, I will have clarity. I will have clarity whether Party A or Party B has come to power, and accordingly I can take a more informed decision. But for that I have to wait, and there is a cost of waiting, that is called value of postponement option. Other example, suppose gold prices are fluctuating. Gold prices are fluctuating. You can open a mine now or after 1 year. The advantage of waiting after 1 year is you will get to know whether the gold price has gone up or gold price has gone down, because you expect that by next year there will be clarity about gold prices. So if you wait for 1 year, you will have more clarity. You will get to know whether gold price have gone up or gone down. One more example, practical example now. You are an oil company and your business model depends on oil price. Oil prices are affected because of global factors. Globally, there are cartels like OPEC. Have you heard OPEC? Organization of Petroleum Exporting Countries. It's a cartel, group of suppliers. They control the supply and price of oil. They control the supply and therefore price of oil. If the cartel will decide to reduce the supply, price will rise. If the cartel decides to increase the supply, price may fall. By next year, I will get to know whether the cartel has decided to reduce the supply or increase the supply, and accordingly I will be able to compute my cash flows more accurately. So I will either open the oil company now, start working on it, or I may wait for 1 year. Let us see what is the market condition after 1 year, and then I will take a decision. That is called option to postpone. So with these 3 examples, I hope now you got some hint. What are we supposed to do? Compute NPV if the project is started now. Compute the NPV if the project starts later. Compare, whichever is higher, take the decision. Option to wait before investing, that is, project does not have to be undertaken immediately, is called option to postpone. Such option allows a firm to delay an investment until it is sure about other relevant issues like election, budget, gold price, oil price, and once you get information about other issues, you can take a more informed decision. So the purpose of waiting is you obtain new information on market, on price, on cost and other variables which can affect your company. Example, company with the right to mine gold may decide to begin operation if the price rise above the cost of extraction. So what we are supposed to do, this is my strategy for solving question. We will compute project's NPV at various date of project commencement, 0, 1, 2. NPV if we open now, NPV if we open after 1 year, NPV if we open after 2 years, and pick the one. If it is an NPV maximization problem, pick the one which has highest NPV. Value of the postponement option is equal to NPV with postponement option minus NPV without postponement option. That is the value of postponement option. If they ask you, then the difference between the two NPVs. Normally when you have an option, your NPV can be improved, NPV can be maximized. Question number 78. Option to abandon and option to postpone, both in the same problem. 2-in-1 problem. 2-in-1 problem means you have to also evaluate option to abandon and at the same time you have to evaluate the option to postpone. May 2004 exam, for how many marks? Only 20 marks. 20. First question compulsory. Oh my God. Very important. In 2004, it was asked for 20 marks. Nobody could do it. Okay. Because it's little lengthy plus little conceptual, and it was a new question at that time because there was never a similar question asked in the exam before that. Okay, so we'll read the problem. You own an unused gold mine. You own unused gold mine. Wow, what are you doing in the classroom if you are owner of a gold mine? But that will cost you rupees 10 lakh to reopen. So that is my year 0 cost of opening 10 lakh. If you open the mine, you expect to be able to extract 100 ounces of gold a year. This is the quantity of the gold. 1000 ounce per year for 3 years. So you can extract gold for 3 years. Per year extraction could be 1000 ounces of gold. After that the deposit will be exhausted. That means you will not be able to extract gold beyond 3 years. The gold price is presently 5000 rupees an ounce. This is the price, selling price. And each year the price is equally likely to rise or fall by rupees 500 from its level at the start of the year. What is the meaning of equally likely? Means probability is equal, 0.5, because there are two possibilities. The price can rise by 500. So price will become 5500, or suppose it can become 4500. If it is 5500, then in the year 2 it can be 6000 or 5000. If it is 4500, then it can become 5000 or 4000. If it is 6000, then it can be 6500 or 5500. If it is 5000, then it can become 5500, 4500. again same, and if it is 4000 it can go to 4500 3500. So these are the prediction about gold prices, and all these have a probability of 0.5 like this. I'm not writing all, we'll write in a diagram properly. Don't write now, I will draw the same diagram for you nicely. The question is, the extraction cost is 4600 an ounce. This is the cost of extraction. This is going to be fixed. This 4600 is going to be fixed. Price can change. Extraction cost will be 4600 and the discount rate is 10%. This is for present value. First question is a problem on problem on postponement. First problem is problem on postponement. Should you open the mine now or delay 1 year in the hope of a rise in gold price? Today the price is 5000 and these are the prices in the next 3 years. But if you wait for 1 year, you will have more clarity. After 1 year you will get to know whether gold price is 5500 or 4500, because if you wait for 1 year you will either reach here or you reach here. If you reach 4500, whether you will open the mine or not, your cost of extraction is 4600. So you will have to check, and if it is 5500, it is very high compared to cost of extraction. I will compute NPV if I open the mine at this stage or if I open the mine at this stage. If I open the mine after 1 year, I have to apply probability also, because probability of 5500 is 0.5, probability of 4500 is 0.5. Two NPVs I will get, and the expected NP will be multiplied by 0.5. Whichever gives me higher NPV, that option we will exercise. Okay, up to this you have understood. Now they have added one more component. What difference would it make to your decision? What difference would it make to your decision if you could costlessly means without any cost, but irreversibly, but once you take the decision you can't reverse it, shut down the mine at any stage. So you have an option of abandonment also. You can abandon at the end of year 1 if you start now, or you can abandon at the end of year 2, because the maximum life is 3 years, but you have a choice to shut down the mine costlessly but irreversibly, either in year 1 or year 2. If you start after 1 year, then you can abandon the mine after completing at the end of 2nd year, or you can abandon the mine at the end of 3rd year, because in any case in the 4th year your mine will get automatically closed. So should you abandon at year 1 or year 2 if you open the mine now? Should you abandon at the end of year 2 or year 3 if you decide to open the mine after 1 year? Again compute NPV with abandonment option. Here we are computing NPV without abandonment option. Here we are going to again compute NPV with abandonment option also. Again we are going to compare now versus later and choose the option which has higher NPV. So we will have two answers here. Now versus later, we have two answers here. Now versus later, but here we have also one abandonment opportunity, and the decision will be based on the highest NPV. One more question, show the value of abandonment option. value of abandonment option means NPV with abandonment minus NPV without abandonment. So this answer minus this answer will be the value of abandonment option. Is it right? Do you want the answer today, or should we exercise the option to postpone? Postpone or today? The student is saying as you wish. So I will draw the diagram for situation 1, open the mind. So first you write in your notebook, write in the notebook answer of part 1. There are 2 parts. We are in part 1. In bold capital letter, answer part 1. Under answer part 1, we have 2 situation or 2 alternative. Open the mind now, open the mind after 1 year. So write down situation 1, open the mind now. Open the mind now. So how the flowchart would look like? How the flowchart would look like? First I am going to draw a diagram for you. Diagram is not mandatory because they have not asked diagram, but without diagram difficult to visualize the entire problem. So D1 write down open the mind, do not open the mind. If you open the mind today, then after year 1, there are 2 possibilities of gold prices. Gold price can rise to 5500 with 0.5 probability, or gold price can go down to 4500 with 0.5 probability. If the price is 5500 at the beginning, then next year from there again there are 2 possibilities. The price can either increase by 500 or decrease by 500. So in year 2, the price depends on year 1 price. If year 1 is 5500, year 2 can be 6000, 5000. If it is 4500, it can be 5000 or 4000. Got it? Year 2. But to make your life more difficult, they have given 3-year problem. So in the 3rd year also, the prices would depend on, we have taken almost 3 hours to make this flow chart. Okay, it is very time consuming, but finally the output is good. You can try also on your own. Using technology to simplify is always better. It is more clear. The presentation looks nice. So have you drawn the diagram? Please tell me. Draw nicely. All year 3 should come in 1 line. All year 2 should come in 1 line. All year 1 should come in 1 line. So you have drawn the diagram. Very good. Now what I'll do, I will ask you to try today as homework. Give your thought to this question. Think what way you would try to solve in the exam. And if you want the answer, if you want the explanation, then come tomorrow at the same time. Thank you very much. See you tomorrow at the same time. Food for thought.